Kelly, Homebuilder stocks took it very hard yesterday, but they did get a boost this morning from that small gain in Homebuilder sentiment. Sentiment has held kind of in a narrow range for the past 4 months, even as mortgage rates have fallen steadily. Rates are down around a full percentage point now since last fall, and builders say that is bringing buyers back. We just saw a huge jump in mortgage applications to buy a newly built home in July, up 31% annually. Now, here's the caveat. Single-family housing starts have been pretty weak this year, partly because builders are worried about the broader economy. Now, I spoke with the CEO of KB Home, Jeff Metzger, last week. He said lower mortgage rates help, but consumer sentiment moves home sales more than rates. Sentiment in housing is strong now, that according to Fannie Mae's monthly survey, but that's all on lower rates, and it doesn't figure in the latest warnings of a possible recession. Kelly?
Diana, how much more of a boost, are we looking at if now that we're getting some headline numbers here. The 10-year yield below 1.5% this afternoon. Is that alone, you think, going to spur more interest?
Now, you have to remember, though, the 10-year and 30-year fixed mortgages track loosely, but not exactly. And in fact, mortgage rates are not falling nearly as fast as the yield on the 10-year Treasury. That has to do with investors in mortgage-backed bonds. They don't love it when everybody starts refinancing because they lose money. So they're not as interested in buying those mortgage-backed bonds. So we're actually seeing a pretty wide spread now between the drop in the 10-year Treasury yield and mortgage rates. Used to track closely, now not so much. Still lower on mortgage rates, but not as low as we might have expected them to be.